Now there is another way, another model that we can look at in which we can look for a bottom in the market much closer to the current lows that we've seen at 1181. Of course, we had the low of 1211, so roughly $30 shy. And this particular pattern is basically called a flat, in which you have 3 and 5 have equal lows. I do give credit to an analyst named Dave Bannister. He's a very, very good friend of mine, and he presented the idea that what we're looking at is simply called a flat, or as Prechter labels it, it is a truncated fifth wave. And let me go ahead and explain how that model would unfold. Now, the model that I want to take a look at, which we basically call a flat or a bear market truncation, that is the term that Prechter and Frost use. This is off of the Elliott Wave Principal Keys to Market Behavior. And in essence, what this model attempts to look at is the fact that there are times in which your final concluding fifth wave will truncate and have an equal low to 3. So you get 3, you get 4, and then you get a fifth wave which has a low that is roughly equal to the low that you had in 3. So in essence, this is what we would be looking at. We have, of course, our wave 1 here, and that corresponds on this chart to wave 1. Wave 2, you get a long wave 3. That's one of the characteristics of a truncated fifth wave, is it typically happens when you have an extremely strong third wave, which we absolutely had. You get a typical ABC fourth, and then your fifth is usually composed of a 5 count, in which so far we've gotten 3. 1, 2, 3, and it can truncate at 3. We could get 4 and then a fifth. You get equal lows, and then from these equal lows, meaning 1181, you start to get your move up. In either case, whether the market unfolds as a bear market truncation, meaning that the low that we get on this most recent sell-off matches roughly the low that we have seen when the market hit its lows at 1181, you get these equal lows. At that point, you are going to get a sizable rally. Now, that sizable rally will typically be an A, B, and then C corrective pattern. And so my sense is that as we go into 2014, whether it is in the first couple of months of 2014, it could be as quickly as January, of course, when the debt ceiling issue gets raised again in the Congress and the Senate. But at some point, this market is going to bottom. And my sense is the two models that we're looking at either has it bottoming roughly in this area or at about $1,100. At that point, we are going to get a sizable ABC rally, and that should be interesting indeed. I think that we are getting close to the conclusion of this fifth wave, and I also believe that this fifth wave will show us the lows that we are going to achieve really for probably the first half of the year, because once we conclude this fifth wave, whether it's as a flat or a bear market truncation or a standard 1, 2, 3, 4, 5, in which wave 5 falls below wave 3, in either case, we are going to see bottoming activity. We are going to see a cessation of the price declines that have been so prevalent in 2013, and I will be looking for higher pricing in gold. And so in part 1 and part 2 of our Outlook 2014, we've presented you now with two basic models of how we see this current downtrend really unfolding and concluding. One, looking for an equal bottom, or what I call a flat, because it's similar to an ABC flat, but a truncated bear market. And then the second model being more standard, looking for one further low in the market. Regardless of which way the market pans out, at the point that we can identify that we have terminated this fifth wave and begun our ABC, we've got some great trades ahead of us, both on the downside as it continues and then on the upside as we go into next year. So the next issue of Chart This will basically take these two models, and what we'll do is we will forecast based on where we think the low is going to be. We'll have one of our models plotting a low with it as an equal low, one with a lower low, and then we'll plot our A, B, C, and that will give you our absolute price forecast for 2014, and that will be on the next edition of Chart This. Obviously, in the meantime, these are the types of topics that we talk about day in and day out. I highly recommend that if this type of analysis is something that you believe will really give you some benefits and make you a more successful trader, click the button on the bottom, try the free trial. You have nothing to lose. Judge for yourself. I really, truly believe that there's going to be opportunities in 2014, and if you're with us at the Gold Forecast, you'll be able to maximize on those opportunities.